We are back at it again here with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, continuing to fight to go higher. And within today's volatility, our SPY buy at 12:10 p.m. sent out a bull indicator. And from that moment forward, the inflows crossed the midpoint to the upside. Full strength on 42 vision and call options went up 100% plus within an hour, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY finding a new resistance level, right? At 400. We've talked about this before on Thursday and Friday of last week, and here we are with it, trying to reach up towards it and rejecting it. And we need to talk about the inflows versus outflows and what's going on here within the charts. But before we do, I want to share with you guys the home run opportunity that was mentioned over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity of the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So the home run of the day was from our Tesla bot. Our Tesla bot sent out a bull indicator since 10:35 a.m. And from that moment forward, the inflows crossed the midpoint to the upside. They crossed back down, cross back up with full strength there later on in the afternoon and full strength there on 42 vision, and within hours call options went up 90% plus. If you guys want to receive this clarity and edge of the charts and know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY in a tight consolidation here between 394 and 400. And we need to talk about what's going on here with the inflow versus outflow and bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to the bots and becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the SPY pulling upwards, rejecting at the resistance of 400. And this is going to be critical because it's not just a technical level, but also a psychological level that a lot of people are talking about for the last several days and weeks. And I've shown you guys where analysis price targets are getting their price targets from. We're going to look at those lagging indicators in today's video as well, but you could see it here, guys. NASDAQ flips positive, S&P 500 reclaims 4,000 mark as investors evaluate the peak inflation narrative. Now, keep in mind, that's the narrative right now. It could take one negative news or anything talking about recession on earnings or earnings going lower than expected, and it could have an impact on the S&P 500 fairly quickly. But here we are with it, pushing up. The inflows are back above the midpoint here. It got really close. Today was a pretty slow day, and now the inflows are picking up here towards the end of the day. And just as quickly as it picked up, it's rejected off of it, and it's fallen from 400 back down to 398 as I'm doing this video based off the 30-minute. But we're also watching here the 1 hour chart. As these inflows, I stated we needed to watch carefully. They're red right now, but they're still above the midpoint if it would switch from red to green and pull away from the midpoint. And it is. It currently is right now. This is critical in the bigger picture. It could continue to try to push it up higher. And based off the history of the chart, the next resistance is back up towards 405 and 410. And above that is 414 to 415. But right now, 400 needs to get broken through, and the next resistance will be 405. And I'm going to be watching these inflows here on the 1 hour very, very carefully as this bull indicator continues to hold, hit a dip area, full transition on 42 vision, but it is getting to a point where it could eventually overextend at some point this week, because that is a lot of rip area there, right? and I cannot ignore it. Now, if it's your first time here on the channel, the rip area is the bright green bars and the dip area is the white with red borders, and the transitions happen from the rip area to the dip area. Bear indicators in between and the inflow versus outflow are there for extra layers of confirmation. And on the way back up, once a bull indicator pops up and the transitions go from the dip area to the rip area, the inflows cross back up as extra layers of confirmation as well. And the reason why we're way up here and the stock is still holding itself up is because even though outflows were pretty big on Friday, there's been a continuation of staying above the midpoint, and the longer it stays above the midpoint, the stronger the chart can be, right? And today, when it was finally getting weakness, that's why not a lot of movement happened in the beginning half of the day. There was a lot of choppiness. It's because these outflows were still dominating. But when things picked up, those inflows picked up and pulled away from the midpoint and stayed above the midpoint based off the 1 hour. And also here on the 30-minute, crossed back up. And on the 15-minute, it was pretty strong, right? It had actually sat sideways here within all this chop. And then we got that bull indicator, slight pullback, no bear indicator. This was still in play. And from 397, it found support slightly below it. The inflows crossed back up. And it went all the way up towards the 400s. Right now it's pulling back and you can see those outflows picking up, but it still hasn't crossed the midpoint in the live action. So let's go ahead and look at these lagging indicators with the bull and bear indicators of where these analysis price targets are coming from that seem very bearish, but then we also have bullish ones in the short term, and we've talked about those articles before as well. But let's look at it in the charts. So here we are with the lagging indicators and the bull and bear indicators, and we're going to break it down in just a moment. But look, this is the article I'm talking about that we've talked about before, and it states here the S&P 500 could get to 4,150 before reality sets in. Morgan & Stanley's normally bearish top strategist. Now, this is the same strategist that states we could hit 3,000 or 3,200 as the bottom, and then also stating in the short term we could run towards 4,150 before reality sits in. This came out in October 31st, 2 weeks ago. We broke it down and I've shared with you guys where it was coming from, right? And it's right here, the purple lines. You could see every single time we've bounced off the purple line, it's been in the middle of a correction. Our major crashes, the purple line has actually went ahead and crossed over the blue line. And when that blue line gets crossed over, in a few months, there tends to be a bottom. But our bull and bear indicators are way in advance, letting us know before the crossovers actually happen, right? And same thing here. There was no crossovers here, but we were able to see it on the March of 2020 crash. And right now we've been able to see on the 1 month chart here since way back here in June that we've been under a bear indicator and why things have gone even lower without a crossover. Now, the reason why they believe we can go down towards 3,000 or 3,200, which is what they call capitulation or the overextension, is because the last time that happened was in 2020 and we bounced right off of it. And there's that line right there of 308. So between 300 to 320 falls in that 3,000 or 3,200. And right now, the stock market is going back up towards that reality setting in area, and that's the purple line here at 401, which is about 4,000 to 4,150 or 4,200. And the last time we crossed over it or touched it, we rejected it, and that was in August, and we've gone down to the new lows, and here we are coming back up towards it. And the question mark is, will we reject it again? It's not guaranteed. This is not financial advice. This is just speculation alone right now based off the technical analysis that it shows us and where they're getting these numbers from, and also based off these articles, but something to not overlook, right? And here we are with it pulling back up towards that purple line. But this is where they say the bottom might happen or somewhere near that. So that's a long stretch, guys. Wherever we go from here, if this bear indicator does not get canceled by a bull indicator, well, it could still be dominating. And if it rejects anywhere on the way up back down, this is still in play. And we need to watch this very carefully and keep in mind way down here. Now, again, these are lagging indicators in the volatility of day to day. it doesn't show us much, but in the technical analysis perspective, it allows us to see the bigger picture and where these analysis price targets may be coming from, right? Now, we're going to go ahead and look at the charts again back towards the 30-minute. We're going to break it all down here at some key levels that I'm watching for tomorrow. So to go ahead and break this down pretty quickly, the first thing is 42 vision seems overextended on the 1 hour, not only on that one, but also on the 4 hour here, as it's in bright green bars and the inflows are coming to a slowing point. And every time that we've hit slightly above 15 on the inflows, they've actually slowed down historically on the chart. The highest point that we reached was way back here in May of about 19, and we're right now at 17, so something to not ignore. Now, it doesn't mean that it's going to make everything just collapse right back down, but a slowdown could be on its way based off the chart's overextension. Not guaranteed, but something I am watching, right? And I'm going to be watching these inflows versus outflows very carefully, as we're at the midpoint here, fighting between the bulls and the bears, and right now the bulls are trying to hold it up. But if the bears reappear and this crosses back down, it could quickly start reflecting here into the chart. And I'm going to be watching if this bull indicator gets canceled out by a bear indicator going into tomorrow. And the first support is 396, and below that is 394. And to the upside, I'll be watching if these inflows continue to pick up, if this bull indicator does not get canceled, and if we could cross 400 and how it reacts between 400, 403, and on its way towards the next resistance of 405. As always, guys, thank you guys so much for watching, and let's make some money.